Hi, this is Dipen Shah, the Senior Vice President with the PCG research team here at Kotak Securities. Talking about markets, the last couple of weeks have been slightly more eventful for the markets as compared to the previous period. We have had the winter session of Parliament going on, and that is what has provided some action as far as the markets are concerned. There were two other important points on which we were focusing on, that is the global markets as well as the RBI policy, and we have pretty much seen status quo from those fronts, but at least on the reforms front we have seen some announcements coming through. The government has been successful in passing the FDI in multi-brand retail, and also the Banking Regulation Act and the Companies Bill have also been passed, at least in the Lok Sabha. The government has also tabled and introduced the land acquisition bill as well as some other important bills, though the insurance bill has been postponed for the next session. So, all in all, there was some action on the reforms front and markets took heart from that. There is also hope which is kind of persisting that further reforms will come through, and also the RBI will start cutting interest rates from January. We all know that RBI has not acted, or it has not reduced rates in the meeting which has just gone by on December 18th, but it has clearly stated that January could be the time when interest rates start getting cut. So, going ahead from now, there are two or three important things to look out for. First of all, it is the whole fiscal cliff issue in US. We have been maintaining that we expect the fiscal cliff issue to be overcome, and we continue to say that. We believe that some solution will be found maybe over the next couple of weeks, and the fiscal cliff issue will likely get solved. Post that, we will once again start focusing on the results, and that's we do not expect any major surprises out of them. So, as far as the markets are concerned, we believe that markets could probably remain buoyant or maybe in a positive mood over the next couple of weeks or so, once till the time the fiscal cliff issue gets solved, and there is expectations of some more reforms coming through over at least the next 3 or 4 days. Post that, we believe that the valuations will be once again in focus. Valuations are at around 14.5 to 15 times now on FY14 basis, and that we believe are not cheap. And for the valuations to move up further, we will need to see some more confidence in the earnings number for the next year, and that would come through once when the reforms which have been announced on the core sector front, or which could be announced on the core sector front, start having their effect felt on the earnings of the companies in the next year. So, probably after the rise over the next couple of weeks, we could probably see consolidation, and markets will then wait for more reforms on the core sector front to take shape and to get implemented. And till that time, we believe that there will be once again a bottoms up approach which we should be following. In terms of a couple of sectors, we believe the IT sector or the private sector banking sector will continue to be positive. That is what we believe will continue to attract more attention. And as far as the other sectors are concerned, we need to be very stock specific and select stocks with strong managements and strong balance sheets having good cash flows. So, that is basically what we feel the proof of the main focus for the markets in the next fiscal will continue to be the reforms, and it remains to be seen whether the government is able to actually take up some further core reforms and implement the ones over the next few quarters. Thank you very much.